Hey guys, welcome back to this channel. Now in this video I'm going to discuss the importance of the recent FOMC meeting and what that is going to do for the crypto price. Now I've talked about in recent videos the most important aspect of Bitcoin moving in the macro medium term is the cheapness of money and the amount of money that is going to go into circulation. So the general policy since 2021, well, late 2021, is the move of quantitative tightening. And that's something that the Fed implements when they believe that there's too much money in the system causing inflation. So after, during COVID, where we got all these stimulus checks and essentially 1/3 of all money was printed in existence, you had the stock market rally, but inflation would become a systemic issue in the global economy. So after 2021, it was decreed that inflation was a very important thing to tackle, and then we got to see that this money essentially become more expensive, and it, I guess you could say, kind of exited the system, and more of this money would come out of the stock market as institutions and whatnot, we're using it to pay off their debt, and ultimately this had a big impact on Bitcoin, and we have basically been in a bull market, a bear market for 2 years, and we've kind of just recovered in the previous year. But something that has really greatly contributed to Bitcoin going up is, besides ETFs and, the mania about Donald Trump, is just the fact that the Fed in the past year had remarked that they were somewhat dovish and that they were interested in reducing this quantitative tightening that they've been involved in, and that really lent itself to the huge run that Bitcoin got involved in, where it basically reached 2 all-time highs last year, and then that roller coaster ride ended, and we, when Jeremy Powell just only 3 months ago announced that he wasn't going to do as many rate cuts as previously thought of, and that one comment alone caused altcoins to absolutely poop their pants. Well, as we can see here, it looks like that we are in a possible reversal of this trend. So the FOMC, according to here, the Fed has announced no rate cuts, rates unchanged, market was expecting this. So yeah, they didn't actually really do anything significantly different, at least in regards to changing the interest rates. But this is important for a few reasons. So number one, I want you to look at the Crypto Fear and Greed Index. I think it's probably changed. It's gotten a little bit better since the past few weeks, but we're in massive greed territory. So when you've got a situation where essentially, nothing has gotten worse, in my opinion, this tends to be a positive thing in the crypto market, because when everyone's fearful, they expect things to get worse, right? So they're expecting for, the FOMC news to be even worse than what it is, but essentially nothing changed, kind of just proving that there's any reason to be fearful. And I think that's one of the reasons why altcoins pumped. And I also want to point out the fact that it's interesting that altcoins pumped far more than Bitcoin. This means Bitcoin dominance is going down, which is a sign of a risk on appetite re-emerging into the market. Now, before I go on with this analysis, I just want to shout out my sponsor, Local Coin Swap. This is a great place where you can buy and sell cryptocurrency without KYC. So when you get onto a centralized exchange like Binance, Bybit, OKX, whatever, the pesky thing is that you have to give personal information like proof of residence, you have to give a photocopy of your passport, all these different things, and this is essentially de-anonymizing your crypto usage. Whoever has access to that information, they essentially know that you've got crypto, and this isn't really what crypto was meant for. So you want to buy it in an anonymous way, and on top of that, you can also buy it in many different payment methods that aren't afforded on centralized exchanges. So on a centralized exchange, all you've got is bank transfer. That's it. And bank transfers aren't particularly anonymous. A bank is going to know that you sent funds to a crypto exchange. Now they know that you own crypto, and the government knows you've got crypto. Everyone knows you've got crypto. You might as well just shout it out from the rooftops. But when you go to Local Coin Swap and you do another payment method, we'll just say TransferWise, Revolut, Payoneer, Skrill, SEPA, all these different things you can do without KYC. And a lot of these things, like, a platform to platform trade, like wires to wires, something like that, it doesn't require, it's not like there's so much information that's being transferred between you and the seller. So ultimately, it becomes a place where you can deal relatively anonymously. And if you're interested in trading crypto on a non-custodial trading platform, you can do that on HODL HODL. Non-custodial essentially means that none of your funds are actually on the platform itself, so you don't have to worry about a Mt. Gox situation, FTX situation. Essentially, you and the seller directly send funds to each other. So when you buy funds from the seller, he's going to send it directly to your cold storage wallet. And then also a big shout out to BitValve. I think it's just an overall good peer-to-peer crypto exchange without any KYC. So let's continue on. Now, this is a statement that was put out by the Fed, and I'm going to translate it for you because they speak in a lot of gobbledygook, but thank goodness for ChatGPT because we can basically just skip to what the heck they're talking about. Does line go up or does line go down? Does money get cheaper? Does it get more expensive? Does money printer go brr, or does money printer go die? I don't know. I gotta think of something better for that. But skip to this little blue square here. Beginning in April, the committee will slow the pace of decline of its securities holdings by reducing the monthly redemption cap on treasury securities from 25 billion to 5 billion. So what on earth does that mean? Drum roll. Thanks you, ChatGPT. This statement from the recent FOMC suggests that the Fed is slowing down the pace of quantitative tightening. That's the thing we mentioned before, the thing that was stifling the market, by reducing the amount of treasury securities it lets roll off its balance sheet. So bullish or bearish for Bitcoin? This is bullish for Bitcoin. Here's why. Slowing quantitative tightening means the Fed is withdrawing liquidity from the financial system at a slower pace. Less liquidity tightening generally benefits risk assets like Bitcoin and especially altcoins. Potential rate cut signal. The Fed may be preparing for rate cuts later this year. So obviously before they cut rates and go balls to the wall, they're going to just start quantitative tightening at a lesser degree before they actually start making money printer go brr. Lower rates and easier monetary conditions tend to push investors towards assets like Bitcoin. Cheaper money goes brr, makes Bitcoin line go up. Market perception of a Fed pivot. This is actually the most important because it's often to do with perception. The slowdown in balance sheet reduction could signal a shift towards more dovish monetary policy. Investors may see this as the Fed preparing to ease final conditions, which supports risk on sentiment. So that's kind of what you need to know, and I guess to give you a very crass idea about how other people see this, it's important to see how other people see this. So maybe you don't particularly care about something like this, but have a look at this little graphic. You've got all these degenerates, myself included, represented by some variant of Pepe. And, just simply based on, a very, very boring, dry speech, you've got people jumping out the window. I hope not. Don't jump out the window. Don't do that. But yeah, people are looking at the chart just simply because of this meeting. And if enough people are like this, well, anyone that is serious in this market is very aware about this stuff. They're going to, this is going to have an impact on the market, even if it's a little overstated, even if it's a little much. So you got this guy here. Just look at that chart. I mean, it's a bit much, right? But ultimately, the market responds to these things. In fact, they might overcorrect. Now, I made in a previous video, which you probably didn't watch, so let me just recap for you. I'm looking at TA. TA is not a science. TA is superstitious, reading the tea leaves, looking at the stars. But I think it's still worth looking at anyway. If you're looking at it along with the macro indicators, I think it's worth a look at. And I look at one main indicator, and that is the hash ribbon indicator. And as I explained yesterday, what the hash ribbon indicator shows is the amount of hash power going up or down. And as we can see, pretty much since the start of Bitcoin, or start of this chart, hash power has continually gone up. And something interesting that Max Kaiser talks about, when someone asks him, what the prediction of Bitcoin was, he says, no, that's not important, and what the price of Bitcoin is. The only important factor to look at is hash power. So that's kind of like the equivalent of measuring the rates of new users on a social network. The more people using it, the more the price fundamentally is going to go up, regardless of what's going on the surface with the price. So essentially, the higher the hash rate, the more secure the network, the more miners there are, etc., etc. This is really the most important thing to look at. And as you can see, it's been in a non-stop bull run. But there are times where the hash power goes down. It goes down for brief periods. And these are very, very brief periods. These periods do not last long. And the reason why it's important to look at this is because whenever there is what's called a mining capitulation, that's basically when the hash power goes down a lot to the point where a lot of miners, well, not maybe not a lot, but a certain percentage of miners will kind of they're no longer profitable, so either they go bankrupt, they should essentially stop doing what they're doing, and they will remove their processing power from the network. The hash rate goes down, and this is measured by this chart. So when it goes down and it's not profitable, for reasons not fully made obvious to me, the price tends to go down. But this indicates usually that this is like a very temporary thing. The hash power always eventually goes back up, and this indicates like a bottom. Like when there's a bunch of miners that have become unprofitable, they take their equipment off, and then eventually others will join the game. Hash power eventually goes back up. But this scenario, this miners capitulation scenario, always indicates a bottom. So as you can see here, when you get the start of this little red dot, it doesn't always just go up in a straight line like immediately. Again, it's not a science, but as you can see, every time that we've got this capitulation, eventually we do start going up. And there are some exceptions where it's not as strong as others, but for the most part, it's pretty good. So you've got this capitulation, that's like this gray dot, and then you've got this big blue buy button, right? Like very, very crass, like nothing technical. But what that big blue buy button is basically when two moving averages for the hash ribbons cross over, indicating that we're kind of back into this bullish cycle, and that indicates like that's the best time to buy Bitcoin. So we aren't at that stage yet. We are currently going through a miners capitulation right now, and it's not a huge one, but it doesn't really make a difference. We had the dip, like the one that I talked about, and we're going to get this cross back over at some stage, and usually it takes like a month, maybe 2 months for the hash power to start kicking up again, going back into bullish territory. Who knows when that's going to be? I've waited up to 2 months for it to happen. The really long one that I remember very vividly was like one that was going on all the way back in May 2021, and then it took all the way till like August for it to play out. So I don't know, it could be a month, 2 months down the line that we start to see that, we get this hash ribbon thing, but I really believe that will be the resumption of the bull market, which is, it's already here. And I don't like to play things too close to their hilt. If I see something's coming down the line, certain environmental changes are happening. So one, we've got the FOMC meeting where the tightening is slowing down, and then I've got this hash ribbon indicator that's going to show that 1 month from now, perhaps, maybe a little bit more, maybe a little bit less, we're going to get bullish again on this with this hash ribbon indicator. I'm not going to just wait and buy. I'm going to slowly start dollar cost averaging in, and I think that's something that everyone should look into as a strategy. You don't need all this hocus pocus that I'm showing you now. Everyone in general, doesn't matter if it's a bull market, bear market, should just allocate a little bit of money to buy maybe every week, maybe every couple of days. It doesn't matter if it's a large amount or a small amount, and unless you're getting wrecked on fees or something, maybe it helps to buy it all in one in bulk or something like that, like it's a Costco. If you can buy Bitcoin at Costco, maybe you should just do it all in one go. Should pick a bottom and a top. But assuming you can't buy Bitcoin at Costco, just slowly dollar cost average into it over a period of time, and that way you don't have to worry about these fluctuations so much. Even if you were dollar cost averaging at the top, you're probably going to be up like 2 years later, or at least back to break even. So that's probably way better advice than what I'm teaching you right now, which is like giving you advice about when the top's in, where the bottom's in. Just DCA and don't sell. That's like the best boomer advice when it comes to Bitcoin. We've got our own we've got Bitcoin boomer maxis. I call Bitcoin maxis boom maxis because they're not as like technologically proficient or that optimistic about other kinds of technology. They like to just keep it real simple. But one thing about them is that they just know how to. They're not into Shiba Inu. They're not into timing tops and bottoms. They just slowly buy and they just never sell. That's why most of the rich people in crypto are Bitcoin maxis, because they just playing it like it's tortoise in the hair. It's tortoise in the hair. So the one final thing that I want to show you is Bitcoin dominance. So what I was remarking on before is that, I mean, you know, it's not often that you see this particular scenario play out where, you know, the alts are outperforming Bitcoin. I mean, it's long overdue. Could this be a reversal? Because as you can see, Bitcoin dominance has just been on a non-stop tear since, you know, late 2022, and we are in this trend. We're in this trend line, should I say, and, you know, it's going to take a lot to break it. We did temporarily break it, then we had some bad news, and we came back above this line here. But pretty much Bitcoin dominance is really important to look at, because that always indicates when risk on sentiment is coming back into town. So if we break below this trend line, you know, I think all bets are off. We're going to finally get the altcoin season we've been looking for. And when it comes to the technicals, I'm looking at the wave trend indicator, and I'm seeing that we are very close to printing a red dot on the weekly. And if that happens, that could be a sign of some good things to come. And as I mentioned in the previous video, we've got this bearish divergence happening here on the RSI. That's basically when you've got a peak and then a lower peak on the RSI, and then you've got a high and a higher high on the price, or in this case, the Bitcoin dominance percentage. So it could be time. Again, it's not immediate, because again, I'm looking at the weekly indicators on both BTC USD and BTCD. So the weekly indicators are something that play out on the long term, but not too long. Like, I'm talking like 1 or 2 months here. So I'm DCAing, but I was DCAing when things weren't going so well. I'm just going to keep on DCAing. I'm going to keep on not selling. I recommend you do the same. That's 100% financial advice. And yeah, that's all for this video. If you like this video, make sure to smash the subscribe button. Use my referral link in the description down below. It helps out the channel, and I think you can also get a discount on the trading fees. It's important to take into account if you're doing this in the long haul. So you got HODL, BitValve, local coin swap. Check it out, and I'll see you next time.